Yo, yo, yo! And welcome to this week's edition of Owl Eyez on BASE Defi, a show where we talk about brand new movements in the DeFi world and then talk liquidity pools, looking at some high yielding pools where you can place your hard-earned crypto and drink from those sweet pools of providing liquidity. Now, joining us as always is my wonderful co-host and expert in the DeFi realm, Crypto Noah. How are you today?
Man, pretty good. It's been raining this week. Markets are choppy, but the government shutdown's coming to an end. Trump's probably going to be throwing people 2K, everybody 2K. That'd be great here in America. Hopefully that most of it floods into markets and pump our bags. But man, I can't complain. For the best part of the show, per usual, I just washed this shirt. I just got it out of the dryer. This is what I was going to wear last week. It says Web3 SSI DID VC blockchain. And I like how it has like little owl face here.
That's perfect.
I got this at this was from ETH Denver 2024 actually, and I didn't go that year. So my buddy Marco, who you met, he sent me a package of shirts because I likes the merch, and this was one of the ones that he sent. So this is from ETH Denver, but I didn't actually get it there. It was sent to me. How you doing today, man? What you rocking?
I'm doing well, man. Today I've actually had like a proper fitness day. I'm a heavyset gentleman, and I'm trying to get ready for next year's summer. So I did a workout, then a swim, and I had a salad for dinner. Can you believe it?
Now he's recording the show. Jeez.
Yeah, but hey, I'm wearing a shirt. This shirt I've had for about almost 5 years. This is probably my first ever crypto shirt. It fits a little bit tighter than it did before, but this is an OG Junkyard Dogs t-shirt. Junkyard Dogs was my PFP that sort of changed my life. So got the logo over here, Junkyard Dogs, and then on the back.
Oh, nice, man. Welcome to the gun show, baby.
Man, the tea is faded beyond belief, but this is now like a pajama shirt or a all right, you know what? I've got to dig deep to keep up with the crypto merch. So there it is. I'm just trying to keep up with you, man, on the swag front.
Well, lace up them shoes because we got a long walk ahead of us. I'm telling you that right now. So, man, yeah, we got some good stuff for this show, man. You ready to jump into it?
Oh, absolutely.
We're going to be. So Coinbase just announced that they are launching a Launchpad, actually. So we're going to talk about that. We're going to talk about, how this week it has been in DeFi. We're going to look at some yields. Basejunkie wants to hop into a pool. So yeah, got some good stuff for you guys. So I'm actually sharing my screen so I can just show this. And then we're gonna talk about what this Launchpad is, how it's different from the Binance Launchpad. And per usual, this is the BASE DeFi show. We're gonna talk about how we think this is gonna affect DeFi. So boom, here it is. This is Yahoo Finance, Coinbase. They're launching their token sale platform, and they're debuting with Monad as their first launch. I'm not familiar with Monad. Basejunkie, I know you were kind of telling me a little bit about them in the beginning. I don't know if you want to, touch on them a bit, but I don't really have any info on that area. But this is supposed to be the first token that they're doing on their Launchpad. So it's probably gonna pump just off of the strength of it being the first one. What do you think, man?
I mean, to be honest, being the first of anything is you have the first mover advantage. Monad has a really strong community. But I'm not sure how deep the community is, in the sense that they've run a long airdrop farming campaign. Now, I haven't really looked too deep into Monad myself, but just in the early days, I was thinking, do I want to start airdrop farming? And I was just like, you know what? I don't have it in me. I'm not really a fan of the grind, but yeah. It'll be interesting to see how many of those thousands of engagements are actually people that will be putting their money where the mouth is and buying on tomorrow's launch.
Yeah, man. Cool. Yeah, that I agree with that. I'm gonna look more into Monad because, like I said, I don't really know much about them. But let's jump into it. Coinbase Global, America's first public company, the crypto white knight. They're launching a new token launch platform for public token offerings that will allow investors to basically invest into a token before it's public on the exchange, right? So it's allowing retail to be VCs. Now, they announced that this platform allows verified users to participate in the token sales before the tokens are listed on the exchange. So you do have to be verified. And like I said, the first sale is slated for the Monad Labs token. The symbol is going to be MON. And this is scheduled between November 17th through 22nd. Okay. So let's go through some, and again, Basejunkie, if you got any questions per usual, feel free to cut me off and ask. So some key structural features. So the payment is going to be in USDC, has to be in USDC. And it's a 1 week window for a purchase request. And then they have this allocation algorithm that basically prioritizes smaller buyers first. So it aims for fair distribution among users rather than whale dominance, which is cool. And then you also have issuer lockups. So tokens by the issuing team cannot be sold for 6 months, right? And users who dump within 30 days may receive lower priority in future sales. So I like how they're kind of policing this and putting rules and regulations. So basically, let's go over how it works, and then we're going to talk about how it's different from the Binance Launchpad, because Binance has been doing this for a while, but there are some key differences that I think Coinbase is doing a lot better, actually. So the first thing is the user must have a fully verified Coinbase account with KYC done to participate. During the sale window, the user submits a purchase request in USDC. So like, for example, I like to buy these tokens, and you have to have the USDC ready. After the window closes, the Coinbase's allocation algorithm distributes the tokens. And like I said, smaller orders are going to get filled first, and then the large ones until supply is exhausted. That makes me think like, okay, if you want to buy a large amount, it might be smarter to do a couple of small orders first, or at least some small orders first. But I don't know how they're going to be allowing that. Like, are you going to be able to only do a couple orders? That is the only thing I want more clarity on. Like, let's say I want to buy $1 million worth total, and I put in an order for 1,000 and another one for 10K, just so that those get filled first versus doing the whole 1 million. But I don't know if you're going to be able to just do it all in one tranche. So that's to be determined, or discovered, I should say. It might be determined already. Next thing, tokens are credited once the sale is concluded and the token is eventually listed. Then you have the post-sale rules that we talked about. So if the issuers try to dump earlier, if issuers flip or users flip too quickly, penalties are reduced for future access. Okay, so now, how is this different from Binance's Launchpad? Basically, Binance has been around for years, like we said, and it's kind of like the go-to launch platform, powered by a centralized exchange as well. And to participate in Binance Launchpad sale, you have to hold and stake BNB versus USDC. This is Binance's native token, and the more BNB you hold, the more lottery tickets you get, and your ticket count is based on your average BNB balance during a specific snapshot period. Okay, so it's more like a lottery system. So that setup automatically favors big BNB whales. It rewards people with larger holdings and doubles as a built-in flywheel for the BNB token itself. All right, so the allocation is either done through a lottery or pro rata sales system, but historically the largest BNB holders end up with the biggest allocations. And Coinbase is, on the other hand, they're taking a totally different approach. Like I said, there's no native token requirement. Will this change when and if there's a base token launch? I'm not sure, but for right now, it's USDC, and there's no staking involved, right? You just need that verified account to be in good standing, and then you pay with your USDC and you're good. Now, here's where things get interesting, guys. Coinbase's allocation model is bottom up, not top down. So instead of rewarding the biggest buyer first, like I said, the algorithm starts with the small purchases. So I've already went through that. This is a big deal because it flattens the playing field, and it gives smaller retail participants a fair shot, and it avoids the typical whale dominance that you see on platforms like Binance. So I think in theory, this should create broader token distribution, fewer mega allocations concentrated in a handful of wallets. Another difference is cadence and transparency. So Coinbase plans to host roughly one token sale per month, and every token launched through their platform will be added to its official listings roadmap. Okay. And the market will likely interpret this as a listing guarantee. And we all know about the Coinbase effect. Like a lot of tokens just pump when they're going to be listed on Coinbase. Binance, by contrast, runs its Launchpad based on deal flow. So there's no set schedule. And while most Launchpad tokens do get listed on Binance eventually, there's no formal promise that they will. It's more like implied than guaranteed. So
question here, because I know with token listings on Base, like with the whole Base app, and like Jesse's been very vocal about how other sexes have these exorbitant listing fees. They want token supply, they want X amount of dollars, all that stuff. They're saying that they're not going to charge on Coinbase, and they want to list everything. So do you think there will still be official Coinbase listings if every token is going to be tradable on the Coinbase app?
That's actually a great question. So yes, I do still think it's going to be Coinbase listings, because you're going to have, like, for example, every project isn't going to want to do the crowdfunding route. And a lot of projects have already raised money and it's too late, but they still just haven't launched their tokens. You have a lot of projects. Raoul Pal talks about this all the time. You have a lot of projects that's just waiting for a blow off top to release so that they can basically ride off the coattails of a lot of buying volume. So if you're a company that raised a bunch of VC capital, and these VCs have their fiduciary responsibility to get a return for their limited partners, you're not going to go on the Launchpad and allow people to buy it first because you've already raised money. You know what I mean? So it's still going to be people raising VC capital that don't want to go the public route. But I think it'll just make it easier for people who maybe it's tougher for them to raise capital, or they want to go to market a little bit quicker, or they just want to launch a token that gets listed on Coinbase. So yeah, I think it is meeting a demand, but I don't think it's going to eradicate projects from launching a token without using the Launchpad, if that makes sense.
Yeah, that does make sense.
Yeah. So does that answer the question? Did you have any more you wanted to unpack on that?
Not at this point.
Okay. So let's keep going here. So we're going to talk about the behavioral design. And this is where Coinbase really sets itself apart. So their system, it includes built-in discipline at the platform level. So like we talked about, 6 months lockup for project teams so they can't dump early. And then anti-flip penalties for users who sell their tokens immediately after launch, which affects their chances of getting allocations in future sales. I don't know how they're going to police like who the same person is. Oh, KYC account. So it's not like you can just flip up a bunch of wallet addresses, which is good. Binance doesn't enforce these kinds of rules at all. Projects can choose to implement vesting on their own token, but there's no standardized platform-wide lockup or penalty system. And I think that's a big reason why the Binance Launchpad sales often see those dramatic price spikes right after listing, followed by, the price falling off a cliff. The demand is front loaded by BNB holders looking for a quick flip, and the supply unlocks too fast, and there's no ongoing program to keep participants engaged for the next opportunity. So I think Coinbase has kind of learned from that, and their structures is built to encourage long-term participation, fairer access, and healthier token price behavior, which could make their Launchpad a game changer, especially for DeFi ecosystems like Base. So
also, if I could just tag in here, I think Coinbase has been smart to delay their Launchpad until now, because they've clearly been studying the market, studying how different platforms are creating Launchpad successfully and unsuccessfully. And as you mentioned, if there's no penalties on these BNB token launches, yeah, it's just a pump dump, and then it's like consolidation and hopefully return. But a platform that's been doing it really well is Virtuals. Now, have you seen much about the whole agent Launchpad?
Yeah, Tibber is the top agent launched on Virtuals, actually.
I know you're big into Tibber, but for anybody who hasn't really looked at like the whole Virtuals Launchpad, like with these Virgin points, like you can accrue and accumulate. if you don't sell your tokens, it kind of creates this incentive to hold, because the more tokens you get, the more allocation or more chance of an allocation for the next 10x token you receive. So it completely suppresses the sell pressure, and therefore the entire ecosystem looks healthier and can grow because people don't want to sell. They want to roll it on their good karma, their good behaviors into the next token.
Yeah, I mean, everything's kind of like a Ponzi in a way, to be honest with you. It's just a matter of how good the structure of the Ponzi is.
Yeah, well, I think Base, they've had a lot of time to study the market, see who's the best, and learn from them, and implement these penalty type tactics to disincentivize people that want to make a quick buck and go on to the next one.
Yeah, I agree. And first mover advantage is important, but sometimes it's not. Like, that's the same thing that happened with Facebook. Like the very first social media platforms that came out weren't the ones that were successful. You had Black Planet, which was very ghetto. You had Tumblr, you had MySpace, right? And then kind of like what Base did, they watch a bunch of people fail so they know like what works. Facebook came out and was the first successful social media platform. And a big reason why they did it was because they policed the community, right? And how they launched. Like, they launched in colleges one at a time. You had to have a .edu account to sign up. And then you didn't just have a bunch of PORN on there, for lack of a better word, right? Just a bunch of people naked posting all kinds of crazy stuff. People don't want their kids on that. People don't want to be on that. So same thing with YouTube. YouTube flags. You can't just post PORN on YouTube. Twitter, a little rambunctious, but hey, first mover advantage isn't always the right way. So yeah, like you said, Coinbase, I do believe they learned a lot from Binance. And I'm sure they learned a lot by launching Base. Like, they did everything that Binance has done. Coinbase is kind of doing better. BNB launched the BNB token, right? Coinbase is going to launch their big Base token years after. BNB launched the BNB chain. Coinbase launched the Base chain way after. And now you have BNB. They already had their Launchpad, and Coinbase is doing it better again. So, hey, God bless them.
I'm here for it.
Yeah. So here, we're almost done with this, and we'll get to some DeFi stuff here. So now we're going to talk about why this matters for DeFi on Base, DeFi and Base, actually. So the first thing that's good. So a couple episodes, we already talked about how they're integrated with Aerodrome. Okay. So they can already, and also we have the Clarity Act that draws the line between what's a security and what's a commodity. The government shutdown put a stall on that. But now that it's opening back up, a lot of people think it's going to open back up tomorrow. It's not going to be closed forever. That's eventually going to get passed. A lot of people think it's going to get passed before Thanksgiving, which would be great because I really think we would have a blow off top. But Coinbase knows something that we don't know. Like, they've been big in like the lobbying and like the political side of things, and helping people get elected, right? They have a lot of leverage politically. So I think it was smart of them to integrate with Aerodrome so that whatever token's a security or a commodity, one can launch on Coinbase and one can be on Aerodrome. But no matter which one, Coinbase is making revenue off of both because they integrate it with them. And that also helps with this Launchpad as well, because now, when a token launches, it needs liquidity. And if it's a security and the Coinbase regular exchange can't handle that, it can be handled on Aerodrome. So now they're making market-making fees from all these tokens that are launching. So if Coinbase begins issuing tokens via its platform, many of these projects, like I said, they're going to need liquidity, trading pairs, and integrations. So that means that they already have that set up. So that's great. So yeah, so that just means more people are going to use Base smart contracts. A token is, you have Pump Fund. You can launch a token on Solana, right? It's easy. But now if it's super easy to launch on Coinbase, everyone is going to want to launch on Coinbase because they know it's going to be seen as more legit. Okay. Another thing, you have an institutional and retail on-ramp. This platform is going to open early token sales to U.S. retail investors in a regulated structure. So they'll be able to funnel new capital into crypto earlier in a token's lifestyle. And then for DeFi on Base, that means a better chance of day one liquidity, stronger listing expectations, and possibly better token economics for early participants. And just like the whole policing thing that they're doing, I'm not sitting up here saying that every token is just going to have like a strong support level as soon as it launches, but it's going to make it a lot better. And if people are making more money, they're going to want to invest more, and it's just going to cause a flywheel, right? And just increase in liquidity in markets. More than anything, you need liquidity. It's all about liquidity and supply and demand, in my opinion. Okay. The next one, governance and ecosystem growth. So with fair distribution, smaller buyers prioritize. Projects may have broader communities from day one rather than highly concentrated token holders. So it'll be easier to build out community. It'll improve governance, reputation, and network effects in DeFi and make DeFi more attractive. Okay. And it just sets a structural precedent. More compliant, transparent token issuance means better investor confidence for chains like BASE. Now, last thing, caveats and risks, because we always got to talk about the risks. Nothing's all good, nothing's all bad. Just because a project participates on this platform doesn't guarantee long-term success, and it doesn't even guarantee that it can't be a scam, right? You have rug pulls where devs will just disappear, pull the rug, but you also have something called slow rugs, where they just take that looking rug and they're just pulling it out nice and slow, and it's almost like you're just doing like this, the thing like everything's going good, and then boom, next thing you know, you're on the floor. So soft rugs I can see soft rugs happening here. And then the next thing is listing guarantee helps, but liquidity and utility are going to be critical. We talked about the Clarity Act, but it hasn't passed yet. So there is a bit of a regulatory risk, right? So even with stricter rules, U.S. regulators could still classify tokens as securities depending on use case. So we do need the Clarity Act to get passed so we can have like full clarity, for lack of a better word, on that. And then lastly, being early in a primary sale is exciting, but flipping early, like I said, you can flip early, but you're going to be penalized. You're going to be penalized, but there are going to be some people who don't care, who are going to flip, and tokens are still going to drop. So you're going to have a lot of people disappointed, like, oh, I thought it was just going to go up. Just keep in mind, this is still a financial market where people can buy and sell. And just because it's on Coinbase doesn't mean anything. There are tokens that have been listed on Coinbase that went to zero. So that's it. Token Launchpad. I'm excited.
I mean, it's going to be a big one. So, yeah, I'm also excited. I think looking at more ways that you can get like verified buyers with incentives to hold. It's going to be interesting to see. I'm not sure if I'll qualify for the Monad launch. I haven't done anything to try to qualify, but even if on the sidelines for it, it's going to be an interesting experiment to see how it plays out.
Yeah, I know their Coinbase is trying to like expand their global footprint, and I know this is like for U.S. investors, but I'm pretty sure it'll be legal for people in the EU pretty soon, hopefully.
Yeah, I'll watch this one, and then hopefully the next one's even bigger.
Yeah, we'll see what happens. Yeah, let's talk about some good old DeFi yields, man.
Man, I think it was the week before last week. I had gotten out of the DeFi yield pools. I was holding Golden that went down and OpenX that went down, and I was out of range for both. So I was like, okay, you know what? Rather than just like wait with my hands, like sitting on my hands, let's see if we can open up a new position. So for me, a project I've been looking at recently is Nemesis. They allow you to do omnidirectional trading. They got a strong community, and they launched with District, who I will be launching Fireside with. So I was like, okay, I had my eyes on them. Last week, I was going to get back into the Nemesis token because I was out of range. So let me show you first of all. This is the token I actually want to get into today. So I want to talk about that afterwards. But Nemesis, let's have a little look here.
And you said they're a cross-chain DEX?
No, they do omnidirectional. So you can short tokens as well on the DEX, like low cap tokens. So as long as there's liquidity, you can trade up or down.
They must pull liquidity from the DEX and handle it through smart contracts. That's pretty cool.
Yeah, apparently it's like first of its kind or something. This was the range I had originally. So in fact, I had a lower range here and it was out of range, and we were talking about like, okay, how can we look at this? And you suggested to raise it up to here. And at the time, I think we were trading like down here. I was bullish. I'm like, nah, we're just gonna go up. And you very wisely and correctly said to me, "Hey, man, you thought the same about OpenX," and we went down. So this is the inverse chart. So if the chart's going up, it means Nemesis is losing value compared to ETH. So ETH is the overperforming asset here. So I think, yeah, so what, -7. So yeah, here we are, the fifth. We're kind of here. I was like, no, we're going to go down. Nemesis is going to outperform ETH. But what happened? I was in range for a day or so, and then.
Oh, I remember now. I told you to put it up a little bit because I thought this could happen. Is this so?
Yeah, this is the one, dude. I was gonna have it like way down here, like 700 or something, and you're like, dude, you should at least have it like 990, where like these candles were. I was like, all right. So I put it up to here. We were in range for about a day, and then we came out of range. So I left it for a day, maybe two. But yesterday I was like, you know what? We are just like I see these spikes. It's the volume's still good. Let me re-range. So I actually did do that. I changed my range to 397. So that's, Nemesis is going to do well, and I raised it to 1.5 million. So to adjust this chart to 1.5, I brought it all the way up to like here. So I'm like, okay, look, this is, and I brought this down even further. I'm like, look, I just want to be providing liquidity. And then not a day later, we had one of these candles, like a big move. This is actually a big green candle. it's kind of funny to see it in reverse. But this candle, huge pump for Nemesis, and I was able to catch that big fish move.
How's the yields pan out for you?
So I started this yesterday. I did completely one-sided.
Oh, that's pretty good for a day, man.
I just put in Nemesis. Maybe like I put it like just below what the rate was at the time. The price was like 1,550. I'm like, let me just get a little bit lower so I can do one-sided, because at that point all of my ETH had been converted to Nemesis. Yeah, so I put it just below, and finally Nemesis had a pump. Price went up, and then managed to catch this big move, and make 5% in a day.
Dude, that's pretty good.
I'm pretty happy, man. After being out of range for a while, actually I opened up another one, and let me see. I opened up a really tight one, like with like a smaller amount. I ended up closing it because it's gone out of range, and I don't think we'll come back. Let me show you that one real quick. Kind of going back to the tranching strategy. This was a token. So at the time, the price was like 1,500, 1,600. So I just gave it like a little bit of wiggle room on both sides, so it could go up, down 5%. I made maybe like $20 off. No, that's not true. Maybe I made like $12 off of maybe $200 while it was in this range, and then boom, that big green candle for Nemesis took me completely out of that narrow window. I'm like, okay, look, I don't think we're going to come back, so I just took my ETH. Currently, it's just sat in my wallet, ready to put into another position.
Okay. So my thoughts: if you're in a really tight range and it goes out of range, even if you have impermanent loss, I just rebalance, because my whole goal is to just stay in range and keep getting that yield. And for the tight range where the yield is higher, the impermanent loss is going to be a lot less, because it's not as much range for it to sell into the underperformer. You know what I mean? So there are some times where you'll get into a tight range and you got to rebalance a day later or a few hours later. Sometimes it happens, but this is good. What you said you wanted to get into a different pool?
So yeah, there's a token that I've seen recently. In fact, they followed me a month ago. They came onto the base breakfast show. Someone was telling me like, "Hey, you should look into this project." The project looks like it's finally gone live, but the project is Finance. They're number one today. They just launched, bringing the stock market on chain, basically, in a nutshell. They've launched at a high FDV, 27 mil. They got 2.4 million in volume. Now, the project itself sounds interesting to me. I would be okay if I had tokens. Cool, I could hold that. But what I'm really interested in is trading off the day one volume. The fact that this has gone live 4 hours ago, 3 hours ago, and already has 2.3, 2.4 now $1 million in volume. I expect some volatility, but I'm wondering, do you ever provide day one liquidity for new launches?
No.
And is that from a risk management point of view?
Yeah. Let me just go through all the variables. The reason why I don't provide liquidity for a token on like day one is because you don't really have any past data to extrapolate what's going to happen with price. So it's a lot more risky. It's just as risky like buying it on day one. Like and when I'm hearing myself say it, it's like, well, you'll buy shit on day one. Why not provide liquidity? And the reason why is because like when I buy something, I'm investing when I'm willing to lose. But when I'm providing liquidity, that's not how I look at it. I'm not providing liquidity when I'm willing to lose. I'm providing liquidity on something that I would feel comfortable hodling. And yeah, you got anything can go to zero, even ETH, even Bitcoin. It's always possible. But by pairing it with something like ETH, it's just like, yo, I'm actually risking losing my ETH and what I'm want to invest in this. If it's really volatile and it goes down and I buy it, hey, my investment went to zero, but I didn't have to lose my ETH with it. But if I buy it and it goes up, hey, I just made out like a fat cat. But if I'm providing liquidity and it goes up, yeah, you'll make some good cash, but you'll make a lot more if you just buy it and it goes up versus provide liquidity. You're gonna have to do an extremely wide range. Like the only token that I would have felt comfortable providing liquidity on day one. If I'm gonna provide liquidity on a day one, I'm also gonna buy at day one. There's no way I'm only gonna provide liquidity for a day one. Because if I think it's gonna be a hell of volume to the upside, I want to experience for that price appreciation. If I think it's gonna be a hell of volume to the downside, I don't want that because like what if it goes to zero? And I would rather just buy it when it goes down because I know how these launches normally go. I would rather buy it when it goes down and then provide liquidity after. You know what I mean? So the only project I would have felt comfortable buying and providing liquidity, because like I said, I would do both, is the Trump token launch. And people made out like fat cats on that launch. It was crazy. It was like a vacuum and it sucked liquidity from pretty much every other token in the market because he launched it. So yeah, I mean, this looks a lot more stable. So it's just like, well, this is the 1 hour chart. So it's a 15-minute chart. So never mind.
Yeah. Let me let me look at how stable the 1 minute chart is. I see your point. I see your point. Like, you want to experience the full upside.
At the same time, though,
Mm-hmm.
this could be one of my high risk pools too. I'm not gonna say never. So we talked about the DeFi wedding cake where we'll have like our blue chip pools at the bottom, take the rewards from that, put into a more risky, take the rewards from that, and then so on and so forth. So this would be like one of those pools at the top of the cake where I'm playing with multiple iterations of profits. So if I lose it, it's not that big of a deal. I still got my other one. So yeah. What were you gonna say?
Well, I'm thinking for this, I do want to put a little bit of, I do want to provide a little bit of liquidity on this, maybe like $200, just to see what happens, because I don't know where this is going to go. I think as a token, it definitely has room to grow. Like what they're doing is you're targeting a big thing. But if I'm providing liquidity, I guess on the downside, then that will help me DCA into the position if it goes
On
out of
Edel,
range.
if you're on Edel ETH and Edel's, yeah, yeah.
So I don't own any Edel right now, but I want to put maybe like 0.05, right? So it's not it's not game over if I lose it, because I think in the long term I think it's also going to come up back anyway. It's launched at a high FTB, but I do want to capture some of this volume, or what's going to happen for like the next 12 hours. So as far as I see it, these guys, they launched on Aerodrome. I don't think they have a Uniswap pool. Yeah, here we are, base Aerodrome. Can you walk me through setting up an LP here on Aerodrome?
Yeah.
Yeah, the last few we've done have been on Uniswap, but I know Aerodrome is more base aligned. So if I'm doing anything on there, I think that's going to help with the eventual base token launch. So I'm happy to risk $100 or risk $150 to get a bit more of a footprint on here using Aerodrome, and then hopefully things go well.
Yeah, let's do it, man. So you already got your range specified, yeah? Because that's going to determine how much you need of each. So it looks like you're in the middle. So you're going to need. It looks like you're a little bit toward the bottom, just a little bit. So that means you're going to. Oh, okay. You're going to make it different.
Or so I mean, do you think I should buy some Edel?
Honestly, dude, it's kind of like if you think of it as like as a fire. In the beginning, the fire is unpredictable. Like when you launching a token is like putting lighter fluid on the fire. It gets real huge at first, and then it returns to the mean, like the concept of mean regression. So for something like this, where you think it can be pretty big, like really volatile, you kind of want to I would have a wider net just at first until things kind of settle out, unless you want to do like a tranching, which I wouldn't do for this probably. But yeah, with this being the 15-minute chart, and this thing just launched a few hours ago, it could drop pretty precipitously. And when it drops, not only will it save you more impermanent loss, but also allow you to accumulate and earn fees at those lower prices as well. And it's already only $1 million in liquidity anyway. So it's not a lot, and it's not locked liquidity. So it could exit at any time. So yeah, something like that looks pretty good.
Okay, so do I need to invert this?
Nope.
All right.
So you need to buy some Edel. I'm going to grab the contract address.
Yeah, grab the contract address.
From the coinest of geckos.
We got Edel. Continue. All right, so I'll do like 0.025. Okay. High risk. Okay, I mean, when it says high risk here, and it's not telling me how many dollars this is.
So you already have your slippage at 1%, so it won't be any more than 1% slippage.
Okay, I can handle that. All right, so we're risking $85 in the name of DeFi science.
Yep, nice.
Okay. So now
launch pool, or you can say,
guided, I guess, or
advance.
That's how we roll.
Yep, that's the only way to do it.
All right, so we got ETH, and
might have to paste in the address. There you go. All right. So now you do concentrated.
How do I see which pool is this? You're adding liquidity to a pool without a price.
Yeah. Well, you might only be able to get into that one, man.
The one that's just the basic pool.
Yeah.
At 0% APR. Sign me up.
I've never seen that like that before. Why wouldn't they have a concentrated liquidity pool? It's probably because a lot of retail investors haven't gotten in, and when you provide liquidity as a team, you have to do it the V2 way so that you can cover swaps at any price.
For just providing does that mean I'm providing V2 liquidity? If it's man,
hit your wallet symbol. It might sometimes you can hit.
Yeah. So right now I'm just sharing this tab. It just popped up the wallet Coinbase. So
you're in there.
All right, $165. Anything that happens, I'm in range. It feels kind of weird.
The trade-off is that sometimes your liquidity doesn't get used. It's not as efficient for your liquidity, but this is the only option that we have right now. But also, you could set up a concentrated liquidity pool and people will come in after. So you'll be the only one there. So you'll probably eat fat for a short time, but it's just not guaranteed. You know, just because there isn't one, like someone has to be first.
That's a good point. I wonder if it was a concentrated liquidity pool at like 0.2 instead of 0.3. Can you set it at anything, like, or does it need to be 0.05, 0.1, 0.3?
For like the fee tier?
Yeah.
You can do anything, bro. Did you see Talladega Nights?
Well, if you're not first, you're last.
Indubitably, sire.
She can be.
But no, I'm interested to see how this one works out. Yeah, it could be good. It's only $1 million in there. The volume to TVL ratio is 2 because it was double what the liquidity is. So yeah, we'll see. We'll see how it works. Yeah, before we wrap up, let's check out some DeFi yields and just see how yields have been on base or are on base.
For sure, man. Are you still eating off your Zora pools?
Absolutely. Let's take a look. I actually the yield's gone down a little bit, and I actually rebalanced my Zora ETH pool. Let me refresh here. So this one's paying out 222%. But remember, man, there's gonna come a day where it's a big candle print and this goes right back up. So I just want to make sure I got my net in the water. I've been in this for just 2 days, and $45 off of a little over 3K. It's not great, but it's not terrible. And then the Zora USDC, I've been in this one for 8 days and $137. Not great, not terrible. But like we say, you never know when the best days are gonna be in the market. We talked about this on a few shows, right? There's a few good days that makes the world of difference in your portfolio, right? This is the value of 10K invested to the S&P on a 19-year time span. If you miss just the 10 best days, your performance is cut in half. And once you miss like the 40 best days or more, you actually start to lose money. It's the same thing in DeFi. Only way to beat impermanent loss is to be in it for the long term, because if you just get in and out and you don't catch like the candles that really like make it worth it, then you won't win. So long term is the best. The Tibber pools are doing really, really well. I've been in this pool. I haven't had to touch this in 43 days.
Wow.
And now I made $3,100, and this is factoring in ETH and Tibber. Well, Tibber is actually up right now, dude. It's like the only thing in the market that's like performing well. It's down 6.7% today, but still at 33 cents. Our first sale target was 42 cents. I recommended at 7 cents, so we got a 600% return. So not only were we playing with house money on our HODL bag, but we're also playing with house money on our liquidity pool bag as well, because I've made so much money being in the Tibber ETH pool since July. I've had to rearrange a few times, but I'm up. I was in there 12, 13, so I'm up like $4,000 on principal, and I'm 3,100 just in the past more than a month. And then this one here, I've been in this one for just 20 days, and in 20 days, $1,400. I'll take it, and I'm up like $1,000 on principal, because this one is a tighter range, 272% right now. So yeah, man, DeFi is still
printing.
Yeah, it's like regular markets, you hate uncertainty, but in DeFi, it doesn't fucking matter. You like uncertainty, you like certainty, because all of it is going to cause volatility, whether if it's people buying or selling. And either way, we're making money. We're just selling ticket for people to get in and out the door. We're like that doorman asking for the ticket. We don't care if you like the show or not.
I like that, man. I think one of the real eye openers. I mean, right now, getting into DeFi and sort of making a bit of passive is great. But what you said before on a previous show about providing liquidity in the bear market, I think that's where I see the value in learning all about this, because if you're providing liquidity and you're just upping your bag size regardless of the volatility through the bear market, when it comes to the following ball after like 2 or 3 years of just accumulation, that's when it's a group move to Portugal.
Yep, I agree with that. Here, guys, for all 100 people watching, we thank you for tuning in. We do have a free community where we post our profits that we made throughout the week every week. and just talk about it, and then a weekly market update, and as well as a bunch of other cool interaction things. And we have a paid community as well where we're offer 5 calls a week, and we're doing our 49 weeks to freedom challenge led by our other coach. We have 3 coaches, and we handpick the best pools, show you to track them and everything like that. And that's just scratching the surface. So I'm going to show you guys the link to join the free community. This is the link, guys. So if you want to scan this, join the free community. I will greet you when you come in. We'll have you introduce yourself, see how we can help. But yeah, that is that's pretty much it, guys. Leave this up for 5, 4, 3, 2, 1. Another great show in the books, man.
All right, man. Yes, always a pleasure to learn stuff. I love the way that you break down the complex into simple terms. We'll try and get the QR code up for next week. But any final thoughts from you?
No, I think be ready for the government shutdown to end, and I think the markets will pump after that. So I'm ready for that. But even if they don't, DeFi is still printing. So it doesn't matter.
That's it. All right. Well, I'm also tentatively bullish. I'm always delusionally optimistic, but I do love that DeFi gives ways to generate on the red days and the green days as long as trading is happening. But no, I want to say a big thank you to you for all the breakdowns, and thank you to 100+ people that have tuned in live. We do these every Wednesday night at 9 p.m. UTC. So until next time, stay safe, stay healthy, but most importantly, stay based. Peace out, everyone.